Hello, my name is Sven Boho, and this is my partner, Trevor Polishchuk. We are the portfolio managers of the Worldwide Healthcare Trust. As we approach the 25th anniversary of the Trust, we are as excited as ever to be investing in healthcare. And in this video, we will tell you why.
Exposure to healthcare in one's portfolio is important for a host of reasons. First, there's a large secular demand for healthcare. Every year, there are more patients to treat, especially with the aging demographics across the globe. There is more innovation in healthcare every year across medical devices, drugs, and diagnostics. There are more drugs approved every year, and there's more spending every year as healthcare spending continues to rise in the US, UK, and around the world. Another key reason to have exposure to healthcare is that healthcare stocks, over time, have clearly provided superior returns over the broader equity markets, and that has been the case for decades. The Worldwide Healthcare Trust is the best vehicle to gain this exposure because we've been doing this for nearly 25 years, and our excitement today is as high now as it was then. We have incredible human capital and healthcare IQ at OrbiMed, with over 80 investment professionals, with 1/3 of them having advanced medical degrees. Simply, we have one of the deepest, most experienced healthcare investment teams on the street. And our returns have outpaced the benchmark by better than 2-to-1 since inception. The pace of innovation remains at an all-time high in healthcare. We are truly living in a golden era of innovation. Today, it's not outlandish to talk about cures for some diseases, whether it be hepatitis or cancer in some cases. And the positive impact that these new drugs are having on patients' lives is truly remarkable. And the innovation has been record-setting, as the United States Food and Drug Administration has approved more new drugs over the past 2 years than any time in its history. There are many therapeutic categories and areas of innovation that we find exciting today, from gene therapy to diagnostics to rare diseases to next-generation antibodies and so on. And they are impacting a wide range of conditions, from cystic fibrosis to diabetes to hemophilia, to name just a few. This decade has brought unparalleled levels of innovation to new drug development.
M&A activity in healthcare, especially in biotech and medtech companies, is an important secular trend in our sector and a very important source of alpha generation for Worldwide Healthcare Trust over the years. Now, over the last 18 months, there have been many noteworthy transactions. 2 of them have been mega deals. First one was Takeda for Shire, a $62 billion transaction. The second one was Bristol Myers for Celgene earlier this year, a $74 billion transaction. And most importantly, the trust benefited from them both. In addition, there has been a flurry of deals in the mid-cap biotech space as well, such as Roche for Spark, Merck for Peloton, and both were acquired at premiums above 100%. And both companies were holdings inside the trust. In fact, we expect the pace of M&A to continue to accelerate in 2019. The hotbeds for potential M&A activity continue to be in emerging biotech, like gene therapy or oncology companies, and in mid-cap medtech companies. And the fund is really well positioned to capitalize on that trend. We are just over 12 months away from another presidential election here in the United States. So yes, we do expect healthcare will play an important role during the election campaign. We do expect as well that the current Trump administration will take some action on drug pricing, but we know that the industry has a seat at the table and the outcome will be more benign than many expect and fear. More importantly, we are very confident that there is little chance for Medicare for all legislation to ever pass in the United States. So while there may be some political noise over the next year, we see no real threat to industry fundamentals coming out of Washington, D.C. Valuations in healthcare are currently very undemanding. The volatility at the end of 2018 created an attractive entry point. And despite of that, healthcare remains an underperformer year to date compared to all of the other industry sectors. Many subsectors in healthcare are now trading at the low end of their historical range, and overall healthcare trades at a 10% discount to the market. So yes, now is a good time to invest in healthcare. While in 2018 the Worldwide Healthcare Trust had some periods of notable volatility, we are excited for 2019 and beyond. The industry is discovering and developing new drugs at an unprecedented pace. The FDA is approving new drugs at a record pace. And these drugs are impacting patients' lives like we have never seen before. This is terrific news for physicians, patients, and investors. These are just some of the reasons to be excited about healthcare and Worldwide Healthcare Trust today. Thank you very much for listening.